A surge on Wall Street yesterday, but earlier this week it was just the opposite, remember, with markets taking a big drop. As you can imagine, that has investors a little nervous. So yesterday I had the chance to go in depth with a local financial planner who's got some tips for all of those thinking of buying stocks. We're talking about the stock market and your personal finances, and we're getting in depth with a certified financial planner, Nancy Hecht. Nancy, thank you so much for being with us.
Thank you for having me.
I'm sure what's on the minds for a lot of people is the stock market. It's been like a roller coaster. It's up, then it's down, a lot of uncertainty there. So what is your thoughts about what might be causing all the changes?
Well, I think a lot of the changes are caused by uncertainty. We looked at coming into this year, presidential election, nobody knew which way it was going to go, the whole fiscal cliff conversation with a little tiny Band-Aid on it, which is going to be fixed or not in a few weeks, and a lot of people sitting on the sidelines in cash because they did not know what to do. Right. And a little bit of bad earnings reports coming out, and not much. Like Yum Brands yesterday was off 1 penny from the projections. Okay. And because it's such a huge company, it had bad news, it took the markets down, so there was a lot of buying opportunities. People that were sitting on the sidelines finally saw stuff on sale and started buying. Okay. And then there's also a lot of companies that are taking, or investors taking profits off the table to bank some gains, maybe at a lower tax rate, so that could have caused some selling today, yesterday. Yeah. Today the markets are up because there's talk about making some type of resolution and not going into a sequester kind of situation, so that has an impact on the deficit and the economy as a whole, so people are a little bit more exuberant. So now they're up.
It's always changed, but that's kind of the nature of the stock market as well. It's kind of a risky investment. So the question for me, for you is now a good time to invest, in your personal opinion?
Well, I always used to say the best time to invest is when you have money. Okay. But you have to do it in a measured manner. You don't want to take all your cash and dump it into the markets on one particular day. The best way to invest is incrementally, or we call it dollar cost averaging. If you have $50,000 that you want to invest, and there's 2 or 3 things that you want to go into, maybe take 3 months or 5 months or the whole year to incrementally invest those dollars so you can take advantage of some of the swings up and down.
Yeah, you don't want to invest money you really can't stand to lose.
No,
right?
no. And you make a very good point. There's a big difference between savings and investing. Right. The money that you need to keep on the sidelines, I call it toe of the sock money, for emergencies, that is savings. Right. And you do not invest that. The investing is done with money that you can afford to not touch for 5 years or more.
Quick question, we're almost out of time. Any tips for people who are trying to get into it? They want to get started but don't know where to begin.
Well, a mutual fund is generally the best way to go, even if you're investing a small amount of money, say $1,000, because you can invest in high quality companies, and you could have 100 different companies with that $1,000 as opposed to betting the farm or on 1 or 2 companies.
Got it. Very good advice. Thank you so much, Nancy Hecht, Certified Financial Planner. Thank you for going in depth with us.
Thank you for having me.